Financial expert explains, money habits keeping you poor. I have spent the last decade of my life immersing myself in the field of finance and money through a degree in finance, a qualification in accounting, and then a career in investment. And one of the most life-changing skills I have learned through it all is how to handle my own finances, recognize my bad money habits, and break free from them. So in this video, I'm going to share with you 9 of the most common bad money habits that hold people back and tips on how to break out of them. Number 1. Paying yourself last. I first heard of this in the book Rich Dad Poor Dad by Paying Yourself Last, Robert Kiyosaki, and it's one of the blueprints in achieving financial freedom. Robert explains that the way people pay their bills can be broken down into 2 types. The first way is the poor people's habit, and that is through paying yourself last. So, as soon as your paycheck comes in, you then pay your rent, your phone bill, your subscriptions, you find your social plans, and then you'll save whatever's left over, if there is even any money left to save. The second method he talks about is the rich people's habit, and they do the complete opposite. They pay themselves first, and that is what you want to do. Take 10% minimum and put that into your savings account the minute you get paid. Treat it like paying a bill. This is so important, and by doing this you're guaranteeing that buying other things before you pay yourself. The second bad money habit is getting comfortable. Bad debt. With bad debt, it seems that debt these days is actually the norm. People are using debt to buy the smallest of things, to buy presents, to buy clothes. I have a straight word, that is, unless I can afford to pay for that thing outright in cash, I shouldn't be buying it with any form of debt. Remember, credit-given companies want you to be bad with your finances because that's how they make money. From this, the average credit card interest rate is 30%, which cancels all kind of benefits and rewards these credit card companies are providing if you're not able to pay them off. Number 1, which is about paying yourself first, and essentially it's saving enough so that it's through that paying yourself first. Start putting that 10% away, and once you have your stockpile, then you can start using the additional money you save to building into your investment fund. And looking at investments number figure is not knowing your income or expenses properly until you know what your starting point is. How do you know where you want to be? There's something called lifestyle inflation, and that is your spending will rise as your income rises. The more money you make, the more you spend, and it's a cycle. Make more money, buy a bigger house. Income and expenses. Rich people financially, they know their assets, they know their liabilities, they have a clear goal on where they want to go financially, and all the steps they need to take to get there. Get a lot of money and build wealth, compared to people who just fantasize about money but have no idea how to go about it, how they plan to acquire it, or how to manage it. Just being mindful of their stuff, and seeing those numbers in black and white will trigger you into action. Fifth bad money habit is having expensive hobbies. A lot of people like to shop. If you want to improve your financial position, you can firstly save more of your existing income, or you can make more money and create more income streams, and the ideal combination is a mixture of both. You cannot build wealth if you're making more money and spending all, but you also can't if you're just focusing on the saving side alone, because there is a cap to how much you can earn on saving interest. So to truly build wealth, you have to think of both sides of the equation, both how you will save a larger percentage of your income, but also how you will make more money investing. There is unlimited potential upside, whether it's investing in the stock market, asking for a pay rise, starting a side hustle. You want to break the bad money habit of thinking about saving money is going to massively increase your wealth. Number 7. Paying too much in taxes. Taxes are going to be the single biggest expense in your life. Whilst everyone has to pay tax, a lot of people just taxes without using the tax advantages. The wealthy have knowledge of legal corporate structures that come with tax advantages. They hire tax advisors that help them minimize their tax liabilities. So if you want to get one step ahead, one of the best ways to increase your wealth is through understanding tax rules in a way that stack up in your favor. For example, investing in stock market, which is an investment account that shelters your dividend and profit from taxes, or operating under a business instead. If you are someone who disagrees with this and prefers to pay more taxes regardless of whether or not you can reduce it legally, then it doesn't hurt to understand the tax rules and reduce that tax bill, so that you can instead use the money to give back to things that directly align with your values, instead of letting someone else decide where that money should be going. If you want me to make a video on tax, I was planning to. I already have a summary on what I want to include, but I have been a bit skeptical about whether to release this. It's a topic that can go either way, so let me know in the comments below. If you want to see that. Number 8, waiting too long to invest. When you start having savings, you have that stockpile, that buffer that we spoke about, then you want to start looking at investing so that your money starts working for you, and you want to diversify those investments so you can weather different situations, operations that come around waiting too long to invest in life. But you want to avoid leaving that money in a bank account, because inflation is a thing, and it means that you're essentially losing money every year. So I have a mixture of safe investments and riskier investments that I'm willing to lose as well. Start looking at different investment strategies once you've saved up enough. Don't leave any additional money more than you need to in a bank account, but the longer you put off investing, the harder you will have to work to get that same money work for you.